Should we buy or sell YETI? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, in the megatrends, I have a theme that I call nature trips. 16% here from the 52-week low, minus 44% away from the 52-week highs. When we go here, we see, various companies, and we have one called YETI. They are in the retail business, 19% from the low, but minus 58% bear market. Here is YETI's website. Yeah, prepared here for Father's Day. So here you can see some of their products like outdoor living stuff for dogs. They got apparel. They have all kinds of stuff. Even a custom cup. And my name is actually Alex, and the vast majority of e-commerce websites are not that sophisticated yet. But one of the major themes going forward, not simply in e-commerce, but more broadly, will be personalization. So in the future, when you go to websites, you will see ads, marketing material, and product images uniquely personalized for you. So let's say that you have a Labrador dog instead of this race here, then you would then see a Labrador in this image. It's a bit of a digression, but in case you want to know what the next big thing in business is, it is personalization to a very deep level. Anyway, here is the chart of the YETI. So we have seen that there was a massive uptrend, back here after, the C19 lows, a massive 607% rally. Then, we have seen a very vicious bear market. What is very interesting here with this stock is that we have reached a very important support level. So you could make a strong case that this and this is potentially a double bottom. Obviously, we will not know whether this is a double bottom, well, a functioning double bottom, until later this year. But if nothing did, then nothing gained. This looks like an interesting level. So I would lean bullish on the assumption that this could function as a double bottom. Looking at the daily data points, something that is a bit of a reason to be a bit cautious, that is this purple 20-day moving average, which disaster, we had the wrong color. We can't have the wrong color. So the purple 20-day moving average, you can see here that it does have a tendency here to attract the bears. However, it also is a level that the bulls try to use as support. So far, we are still below that key moving average. So I do understand why some people would want to wait, in terms of turning bullish on YETI until we reclaim that as support. Let's look at the other indicators here. So looking at RSI, we are at a very low level here on the weekly data points. We have been a bit lower here in the past, during the 2020 plunge. Looking here at the daily data points. Looking at RSI, we are in. This is a very noisy level because while we do have some recent, interesting action here from the bulls, we have also reached a level that was resistance here as well. So very noisy. So let's go into the laboratory. So well, maybe we should just say the double. So I wrote down double bottom versus 20 daily moving average resistance. So given the current situation, I will give the technicals here a 2. However, if we are able to get above the 20 daily moving average, then I would upgrade it to a 5. Let's look at the seasonality for YETI. So to the right here, we just do not get any data, and that is because, this stock is a newcomer on the public market. To the left here, we do get some data. So over the last 5 years, which kind of is the last 4 years, given that, we obviously do not have any data for June in terms of this year, but June and July are the strongest months for YETI, closing higher 100% of the time, average almost 20% gain in June and 13% in July. So I think that the seasonality here is very strong. I will give it a 6. This is very, very good seasonality. Let's look at the fundamentals. So SAX has a number 3 hold, but they do have a C value, but an F growth score, then we have an A momentum. So the style scores are a bit noisy. It is of course good to see that the value score is decent. Industry rank top 16%, leisure and recreation products, that's bullish. Market cap approaching $4 billion US, rather high beta at 2.57. And when we go here and look at what the insiders are doing, then throughout, especially May here, accumulation, meaning buy. So the insiders are buying. They were also buying here in February, but we also saw some selling then. But it is good to see that the most recent action here from the insiders is accumulation. And when we look at the consensus estimates, then we see that 18 analysts are covering the stock, an average 60% upside price target. Highest target is 162% above, and the lowest price target is 4% above. So that is pretty darn good. I think I will give the fundamentals here a decent 4. Looking at correlations, long term we have 89% with the S&P 500, 92% with the XLI, which is the consumer discretionary ETF, then 96% here with XRT, which is the retail ETF, then minus 66% with the dollar index. Daily data points, 80% S&P 500, 88% here with XLI, 98% with the XRT, and minus 80% with the dollar index. So what happens with the XRT? XRT is very likely going to affect YETI. So here is the XRT. We do see that we recently bounced here from this very, very much important red 200-week moving average. So that's interesting. We also see that we bounced from a support level here on RSI as well. When we go to the daily data points, we see that RSI has, of course, increased here with the price. But there could be, more fuel left in this move because we are not, at levels that are like super attractive to the bears. So yes, could be more fuel left. Here is the relationship between YETI and the retail ETF, XRT. You certainly could argue that this looks a bit like a major head and shoulders pattern. So that is the bearish thing I see here. On the other hand, so let me just draw that in. You could certainly make a case that this also is a potential horizontal support level for YETI. So on the one hand, you have a bearish head and shoulders, but the thing about the head and shoulders pattern is that you can quickly get a major horizontal support level that is formed, by the head and those two shoulders. So let's go here and look at the daily data points like this, because then we can get some. Well, there's no point really in looking at seasonality because YETI, the data from YETI will make that impossible because we don't have enough data. But if we go here and look at the S&P 500 versus the XRT, and we go here to the weekly data points first. So here you can see that during this major rally, retail was outperforming the S&P 500. Then we got, a textbook. We need to have the right color, of course. We got a double top. Then we had a major sell-off. Now, on the topic of head and shoulders patterns, we do certainly have something that is head and shoulder-ish. But this is what's called an inverse head and shoulders pattern, which is potentially bullish. So that's interesting. It means that there's an increased probability that retail will outperform the S&P 500. Further, we do see that retail on the RSI has pulled back to a level that has a tendency to trigger mean reversions to the upside. When we go here to the daily data points, so in red here, over the last 10 years, retail tends to outperform the S&P 500 leading up until the beginning of July. In blue, over the last 7 years, we see something very similar, and in green, over the last 5 years, we see the same thing. So we did see something very interesting in regards to the XRT, which was, the retail ETF, and YETI is very strongly correlated with it. So given that it is bouncing from key RSI and moving average support, on top of it, we also saw that the seasonality for retail is pretty good going forward, at least leading up into July. So that is just bullish. So we end up with a 5 here for relative performance, an average score of 4.3 in favor of the bulls. So the data is more favorable of bullish trade ideas than bearish. Those bullish ideas can be expressed, through buying the stock, with, of course, having a stop in place. But also you have the option market, and that is when you can get very fancy. The key line in the sand is that we do have a double bottom, a major, big picture double bottom. That is bullish. The caveat is that we are still below that 20 daily moving average resistance. And as I said, something that would improve the technicals here is definitively if we are able to get above that 20 daily moving average level. The bears, they certainly like to short that 20 DMA level, but the caveat is that major double bottom. Because if I was going to, short YETI based on, 20 DMA resistance, I would certainly feel very uncomfortable about the double bottom. Further, the seasonality would definitively make me tighten my stop, and if I looked at the fundamentals and relative performance, then I would feel uncomfortable. And that is the key part of this scoring system. The reason why I look at technicals, seasonality, fundamentals, and relative performance, it is because I want to know what the other participants in the market are most likely to do. Are they more likely to put on bullish or bearish positions? So when you have a situation like this, when different types of bears have good reason to be afraid, then that puts the odds, in your favor by being on the bull team. Having said that, it is still very important to have some line in the sand. you need to have some kind of stop level. Thinking more, big picture, about, the S&P 500 and, stock markets, globally, I do think that there's a very high probability that we are in the early phases of a long-term bear market. The thing is that, during a bear market, we tend to see protracted rallies. Similar to how we see corrections and occasionally even a plunge within a major bull market. That is why it is very shrewd to have, a long short portfolio in a bull market, but also in a bear market. Because by looking for bullish and bearish opportunities, it makes it a lot easier to analyze securities objectively. If you get way too skewed in one direction, you get a strong bias, then you can be very blind to the other side. In fact, during the C19 plunge, we had, various short funds and also wicks, volatility funds that absolutely crushed the market during that plunge. I mean, they made huge gains. However, they were so biased, in that, bearish direction that they lost a lot of those gains as, the market started to rally. So yeah, just super important to analyze securities objectively. Okay, so have a great week ahead.